Good day. Today we have Jaco Prinsloo, CEO of Sylvania Platinum, with us to discuss the latest quarterly, the first quarter of the FY23 financial year, and then also the exploration results. And I think I will go straight into it. Jaco, welcome. What results did you announce last week?
Thank you. It indeed has been a busy week or two for Sylvania. We first released last week a long-awaited update on our exploration announcements, and that's on the study results from various of our exploration assets. And we released last week on the 24th of October, and then we also released just this morning an update on our quarterly performance which is the first quarter of the new financial year. While I'm quite excited about both announcements, which I hope are good news to the market, it's probably worth highlighting a bit more on the exploration announcement, as the quarterly announcement is quite a standard update and investors would be quite used to it. As most investors know, we already, Sylvania owns, besides the very cash generative and current producing Sylvania dump operations, we do own a number of lucrative exploration assets on the northern limb of the Bushveld Complex, and which we acquired many years ago, but for which we own approved mining rights. So after many years of limited progress, primarily due to the PGM price environment at the time, we commissioned during late 2020, early 2021, some very specific projects to see how we can optimize these projects in order to determine how best we can add value for the company and return value to investors. In other words, we wanted to be determine if we should develop these projects, dispose of them, partner potentially with someone, or how able to execute. So after 2 years since the studies were commissioned, we are proud to have released during last week these results on our exploration studies, and they include both the scoping study and a mineral resource estimate for our Volspruit project, as well as updated mineral resource estimate on our far northern limb on the Aurora project containing the Lapicella project area. So that's what we've announced during this past week.
Good. Maybe we could just have a couple of paragraphs on, or a couple of words on the quarterly results before we go into the exploration. Your results showed a strong performance for the quarter compared to the previous quarter, which was also a very good quarter compared to the previous quarters to that. What are the highlights of this performance, and can it be repeated over the next few quarters?
Thank you. If we briefly turn, as you say, to the Q1 results that were released this morning, I'm obviously very proud of the results. Our team has been able to deliver a sterling quarter, and as you pointed out, we've been able to build on the momentum of the previous quarter, and provide a very good quarter ended up to the 30th of December. This quarter was in fact the 4th best production quarter in the history of the company, and the best production performance since the COVID-related hard lockdown in early 2020. Whereafter we had to deal with various production challenges over the years, but most notably was the slowdown in the underground production at our host mines that consequently impacted the ROM feed grade and quality at especially our Moino operation, and we've over the various years have reported quite intensively on it. However, this good performance for the current quarter was driven by 5% higher production feed tons and also 1% improvement in recovery, despite the lower feed grade. And you would say I'm contradicting myself because I just said that we have better grades from underground, but this is not because of a deterioration of feed source or grade at anyone, but rather a higher contribution of lower grade feed material at our Lesedi operation that is now recovering from the historical challenges that we've had. Other operational highlights obviously worth noting and highlighting is the continued strong safety performance of our eastern operations, achieving 6 months all injury-free up to September, as well as our operating costs that have improved from the previous financial year. It already improved in the previous quarter, as you pointed out, and we're hoping to build on that going forward. And the rest of the financial data is quite self-explanatory. We've had a 57% increase in EBITDA. And that's primarily a result of strong PGM ounce production, improved basket price, and then the stable cost control. But investors are welcome to visit our website for those results. I think in terms of your question, if we are able to repeat these results going forward, and a lot of people are saying, if you can do it in one quarter, why can't you do it all the year? We do believe that most of the challenges we've had over the last couple of months have been resolved, and we are targeting strong production going forward. However, Q2 and Q3 coming up contains December, the Christmas month, and January, when the miners historically and typically take a break over the Christmas period, which means that we might see lower underground and ROM production volumes over that period, which is typically higher grade. So we are cautious, and we will evaluate our guidance early in the new year after our interim results to see, how it will impact the year.
Okay, that's great. On the exploration, if we can turn to that, your exploration results are really exciting. But you did not include rhodium in your scoping study of the Volspruit project valuation, and you discovered a reef called the T reef in the far north limb project. Could you comment the possible effect of including the rhodium in your scoping study, or the value of a scoping study, and what it means that you have discovered the T reef, what it could mean to the far north project?
Yes, if as investors may recall, we have announced a time ago that we commissioned these specific studies to whether, and I think the primary objective we announced at the time was to see if we can deliver a saleable PGM concentrate from these respective exploration projects, so that we can rather sell a concentrate to a toll refiner or a primary producer, rather than us investing in a riskier and capital intensive downstream infrastructure. So that was the main event, and we've employed the services, and we're quite happy with the outcome of that, of Earth Lab, which is a reputable mining exploration specialist company, specialized geologists who have assisted us in these projects to see how we can do it. So when we looked at Volspruit and to first evaluate the resource, we started to look at the historical PGM analysis and historical drill core data that was available from previous exploration studies. But these unfortunately excluded rhodium at a JORC compliant level. So we couldn't include rhodium in the current resource estimate, and also in the scoping study. And I will explain a bit later why, what that entails in terms of the project. Turning to the far northern limb, as you have pointed out, the discovery of the T reef, or the T zone as it's commonly referred to, it was indeed a very pleasant and significant discovery on our exploration area, as it represents a significantly higher PGM feed grade than the typical plat reef that we initially expected based on the geological interpretation at the time. So both these were positive for us, and quite material in our exploration findings.
What could rhodium add to the Volspruit valuation? I know I might be putting you on a spot, and you possibly can't comment on that at this stage, but can you give us a sort of an idea of how much value could it? Well, let me leave it at that.
Look, so I think when we look at the Volspruit study as it is now, I think I've mentioned that we started focusing on just part of the study, and there's two parts to the Volspruit valuation that could impact significantly on the value of the project going forward. The first one is that in order to start off the project and prove concept, we focused on the north pit of the resource first. The north pit, there are two pits on the property in our exploration area. It's a north and a south pit. The north pit represents about 58% of the total area, but it had better drilling density, and we focused on that. But unfortunately, it still excluded rhodium because of the JORC qualification, as I mentioned earlier. So when we look at what it could add, first of all, what did we see from the current scoping study? So based on the updated mineral resource estimate, which Earth Lab done on the revised geological interpretation, and and focused only on the south pit and excluding rhodium, we saw that we could get a net present value of about $27 million on a capital investment of about $147 million. And while this is not a dripping roast, and certainly would at this stage not trigger an immediate investment decision, it is very important and noteworthy for us because it does indicate that there's a realistic prospect for eventual economic extraction on this project, and therefore serves as the motivation for us to continue to the PFS. So coming back to putting me on the spot and saying how much upside potential. So I can't, because these scoping studies have to be at a JORC compliant level and there's certain criteria, I can't quote you exactly that. But what I can say is from our non-JORC metallurgical results, so the new metallurgical results we've done and selected cores we've re-assayed, we know at Volspruit that the ore contains between 5 and 6% rhodium. And hence, if you then look at the estimated 700,000 2E plus gold ounces we declared as part of the announcement, that would be between 37 and 44,000 ounces of rhodium over the life of mine. Now, I know, Edison and Renee, on your forecast, you use a higher rhodium content, but using a conservative long-term rhodium outlook, say only $6,700 an ounce, you could add $250 to $300 million over the life of project at no additional expense or cost by including rhodium. So certainly that's a very noteworthy and significant potential upside. One of the UK analysts published a research note last week indicating from his estimates, he was brave enough to put a number and say he think you would be able to increase the NPV by 4-fold by including the south pit and rhodium into the project. But as I said, everyone has to use their own assumptions. You know, I gave an indication of how much rhodium you could add.
Yes. Like, well, I haven't said yet, but we've done our own calculations, but we're using $14,000 per ounce of rhodium, which is a lot higher than your 6,000 that you're using. But when we do our report, we'll mention our valuation. Just the last and final question. What is next on the exploration agenda?
Look, we obviously for us it's important that we I mentioned first of all that on Volspruit we currently rhodium is excluded and then the south pit's excluded. So it's a big priority for us to include both rhodium and the south pit in our next pre-feasibility study that's underway on Volspruit. So we are aiming to deliver that hopefully by the end of the next financial year, so it's by June, July next year. And we also, so we will do an updated mineral resource estimate for the total project area, and we will then do the PGM process design and metallurgical test work also up to a pre-feasibility level so that we can take the next decision for the project. That's in terms of Volspruit, and I've already indicated how much potential value could be. Then in terms of the far northern limb, obviously we will do what I haven't mentioned earlier. So the current mineral resource estimate we declared or published last week for the far northern limb on the La Pucella, what we call the La Pucella target area, which is a portion of our Aurora project, and only represents about 12% of the overall project area we have. So we've done just about 2 kilometer strike length and over 14 kilometer total strike length. And we would extend our studies in the remainder of this next financial year to include the next 2.2 kilometers. So just more than doubling that resource area, so that we can increase the resource, and therefore, you know, you have a project with a longer life of mine. And secondly, we're also going to subject that project to a scoping study or a preliminary economic assessment during this next financial year to determine its viability going forward. Just looking at the grade of the far northern limb and the steer reef that we mentioned earlier, you know, it is a better reef grade than the Volspruit project and a longer strike length. So it is certainly very attractive, and that's why we also have to evaluate that and see where we can get. So we're hoping to add significant resource and then more confidence in terms of the scoping studies we concluded in the next financial year. We have committed for this next financial year about $4.4 million or 70 million rand to use the functional currency. For these specific exploration assets, it has been communicated and included in our forecasts forward-looking that we've published to the market as well earlier this year. So it's already planned, and as I said, most of the work is currently in progress.
Yeah, no, it's very exciting. That T reef is a very thick reef, and it could potentially lend itself to massive underground mining, very similar to your neighbours in the north there, the Platinum Group Metals, who are looking at long hole open stoping, So
Renee, I think maybe worth noting just on that point is that the one distinction between the T reef at our property and that to our neighbours to the north you mentioned is that south of the Oak River Shear Zone, this T reef is actually has been shifted to surface, so it's actually outcropping on surface. So on our properties, it's an open castable or open pittable resource, rather than the deep level, and that's what is such a big surprise to us. And I think that's what caught everybody, the geologists historically, by surprise, is that everybody interpreted it, because it was so shallow, as a flat reef. But when we launched the study, our Earth Lab discovered academic research published in 2017 by Dr. Ian MacDonald from the University of Cardiff, together with fellow authors, which include Rhodes University and some other UK universities. And they identified this reef on Aurora property as potentially T-zone mineralization. And what we have been able to do now in the last 18 months was to confirm that fingerprint of the mineralization on our project through additional drilling. We've drilled some targeted additional drill cores on those properties during that area. And we've also re-logged the historical drill cores that proved that we are indeed sitting with a T-zone mineralization at surface, which is quite significant. So that's why it's so important for us to now expand it to increase the rest of the strike length, so that we can add to this resource based on this classification.
One final question. There's also the F reef or the F zone in that area that Platinum Group Metals has discovered. Is there any sign of that yet on your property?
Yes, there is. We haven't at this time spent significant money on exploration for that. It is quite a bit deeper. It's quite a bit deeper than the T reef. That would most probably require underground mining methods rather than the open cast mining methods. And because it's deeper, we try to limit the drilling expenses at this stage, first of all, to see if we have, as I said, to determine the potential of the results. So we primarily focused on the T reef for now. Certainly the F reef is at the bottom of that, similar to the Platinum Group Metals Waterberg deposits. But as I said, it is deeper than the T reef, and we have at this stage only focused on the T reef for our studies.
Good. Thank you very much, Jaco. This looks very, very exciting, and I hope you actually get to the point where one day you actually start a mine in that area, and add a lot of value to Sylvania.
Thanks, Renee. You must not scare our investors off. We are certainly doing these studies to determine if what is the correct strategy. I think I just want to also caution that it doesn't mean we necessarily are going to jump into it, but it will enable us to make a decision to say, do we strategically partner with somebody who has the right mining skills and expertise, who can who we can partner with. Certainly the processing skills is identical to what we have already been doing for many years, and we're quite confident that the processing and metallurgy side of it we can handle, and finding a suitable partner either to then develop it, or if we don't have the appetite ourselves, to see do you dispose of it. But certainly it is an attractive resource, and I think something worth exploring in detail and not making a hasty decision on it.
Great. Thank you very much, Jaco.
Thanks, Renee.
Thanks for joining us today.